And with that being said, I'm going to get our first panelist introduced. So Roger, let's get started with you.
Hey guys, good afternoon. Roger Jennings, Lima One Capital. I am the Director of Valuations and work in the private money non-QM space. Great to be here.
Katie?
Hi, everyone. My name is Katie John. I'm the Director of Appraisal Management at NP Inc. I am over our appraisal department for our retail, wholesale, and non-QM side.
Cool. And hi everybody. This is Keenan Chen. I am the EVP of Corporate Strategy for Clear Capital and over our strategic relationships as well. Happy to be on the panel. Thanks.
Hi guys, this is Akil Ahmed. I'm SVP Operations at ValueLink Software. Appreciate all the panelists joining in, so appreciate the partnership and looking forward to this.
Great, thanks everyone. So on the agenda today, we're going to go over three topics: industry, market, and technology. And as a reminder, if you do have a question, we're more than happy to answer them. Just use the Q&A button at the bottom of the Zoom screen to submit it. And to get the conversations going, I'm going to hand it over to Rhonda.
Thanks, Bridgel. Hi, everyone. Thanks for joining. I know we're eager to get to the questions, so let's just dive right in with top of mind. So first, I want to say there is this perception that the industry is shrinking, and we see it. We see it with consolidation activity, with divesting, reduction in staff. So companies like yours have been able to stay competitive in this market and profitable. So Katie, we'll start with you. Do you agree that with this perception, and what adjustments have you made to stay successful in the market of rising interest rates and low inventory?
Absolutely. Great question. I think what we're seeing in the industry right now isn't necessarily new to anyone in lending, right? We've seen interest rates rise before. We've seen potential applicants and borrowers, question whether or not this is the right time for them to start their journey of home ownership. What's been really fantastic during this time is the amount of innovation that this time has really brought to the industry. Here at NP, we have a really strong and unique relationship with an insurance company that gives NP the ability to sell product at a more competitive rate and guaranteed forward commitment. That, coupled with NP's very diverse loan programs to be able to service more borrowers, and the appraisal modernization movement that we're seeing with programs such as the Freddie ACE plus PDR program, that's really helped NP Inc. stay competitive and help more borrowers achieve that dream of home ownership.
Great feedback, great insight. Roger, what about you? What are your thoughts on that?
Yeah, speaking specifically to the non-QM space, for Lima One, directly I can say it's the diversification, right? So the product offerings, and as a non-QM or private money lender, offering new construction to fix and flip to long-term, right, is critical, especially now with our space becoming even more competitive, right? It's not just the volume that we contend with, it's also the products that we're able to offer, right? So, I think Lima One's best known for customer service, and, we truly go above and beyond, but without the products and the product offerings, right, the borrowers aren't looking your direction or opening those doors. So, it's such a strange time in the industry. To Katie's point, you're right, like the conventional side, we're used to the roller coaster. What comes up has always come down, and always will. And I think we'll see the same on the private money side, but with the private money growth and the non-QM growth being as substantial as it's been, it's leaving companies like Lima One a huge opportunity to offer that customer service and products that haven't been offered before, right? Exceed those bars where the conventional world has been there and is in place for such a long time. I think on the non-QM side, it leaves a lot more excitement in place because so much is new and growing and rapid.
So Kenan, I see you nodding your head. Did you have anything you wanted to add before I move on to the next question?
Yeah, no, I love that perspective that Roger and Katie have. While certainly we see some headwinds that are impacting, maybe the number of loans that are happening or the interest, but where we're seeing expansion is a number of different types of products that are being offered, and the demands that are on companies like us is to stay innovative and ensure that the products that we have match the experience that lenders want to create with those new loan products, and so it's driving us forward even in the midst of headwinds. I feel like it's a time where the industry is looking to the future more instead of just trying to keep up with overwhelming demand and volume. So those are positive things moving out through the rest of this year.
Akil, I see you nodding as well.
Yeah, absolutely. I mean, I would definitely echo the sentiments here of our panelists. It's definitely a changing market. Interest rates are high. There's margin compression, but it also gives you an opportunity to understand and ask questions for yourself that how are we prepared? How is an institution prepared to handle this market and navigate today's market? So it's an important, benchmark to understand and see how we can improve our technology, and gives you an opportunity as well to kind of dissect every part of the process and see how we can optimize and take advantage of, this time. Roger, mentioned about different product offering, there's an uptick in the purchase market, while, you're looking into options for HELOCs and different manufactured homes and different products. So it's a great opportunity to also look at your tech stack, understand how it is and how you can make it better to take benefits of this time that we're in.
All right, well, let's move on to the next question. Let's talk about the GSE regulations and new products. So it's really great to see the GSEs pushing for modernization, right? But lenders, obviously, they want faster close time, they want reduced cost, but majority of the people want to pivot, but haven't either made the move yet, they don't know enough, or they know about it, but they have not made the business decision. So Kenan, I'm going to kick this one to you first. I like this question. Do people stay true to what they've been doing or embrace the GSE appraisal modernization movement?
Well, it's something that people in the industry, talk about a lot, which is, kind of the feast and famine mentality. Like when there's so much to do and it's so busy, no one has the time to implement something new. And then, when we have a downturn, perhaps it's difficult as well to invest in change, and especially right now where every loan is precious, right? Every single opportunity is precious, and understandably, some folks are nervous to make a change that might kill that precious deal, or that's something that they're not used to. But I think some things that we've learned here is that, number one, that the GSEs are committed to appraisal modernization, not just as a means to solve a capacity issue like we saw, with last year. They're looking over the long term and seeing that this is the direction that appraisals needs to go. Appraisals have been lagging in innovation, lagging in keeping up with the digitization movement within mortgage, and have been behind. And so the need is that that appraisals become more transparent, more accurate, and more flexible based on risk to meet the demands of today's mortgage products. So I think that ultimately, I think people are realizing that, like, oh, this is not just a knee-jerk reaction to the pandemic. It's not just a knee-jerk reaction to the record year that we had last year. This is actually the roadmap of where Fannie and Freddie are heading to ensure that appraisal meets the demands of homeowners and home buyers, and reduces the risk of bias, and ensures that there's an equitable approach to valuation across the country.
Very good point, particularly in terms of, the GSEs being committed to this end. Want to open it up for other panelists to weigh in as well. Any thoughts? Roger?
Yeah, absolutely. So, there's so much within that question that rattles through my mind, right? First is, the slowdown over time and historically, you see the success on the lending side. And, speaking specifically for non-QM, right, we stayed so busy, through the increase that it really does. It feels like a year of reaction, right? You come out the other side sweaty. I feel like we just ran that, that crazy marathon that at the end, the guy's throwing water on himself and cheering, right? So, but the truth is, as things slow down, the best of the best fine tune their process, right? And that's why they're the best. So as things modernize, the modernization on the GSE side also happens on the non-QM side, and maybe even more, right? Because of the abilities that we have, right? The private money side is more flexible than the GSE side. So ultimately, as the slowdown's begun, now you sharpen your tools. Now that technology pieces that you fine tuning your process around your appraisal technology, the appraisals that you offer, right? The hybrid that's been an ongoing discussion for 2 years now, right? I mean, all of these things play such a big role in what happens next and your survival, really, right? So we're, speaking, specifically to just Lima, we're seeing increases month over month since the slowdown, right? Just because of the side of the house that we're on. And like all mortgage, we're going to see up and down on both sides. But right now we have the ability to capitalize and increase our volume due to the product offerings in the market that we target, right? So investors are still there. We still have a housing shortage. And with the opportunity to use these new products, tools, and features and systems, I mean, you really, really can make a strong, solid impact. And I think that's what you're seeing in not only Lima, but quite a few private money lenders.
Yeah, very insightful. I'm going to probe a little bit more on that, Roger, when we get to the market segment. But on to the next question. So, and Keenan, I'm not trying to pick on you, but I'm going to pose this one back to you first. So there's industry talk about Freddie's ACE Plus PDR product. What is it? When is it available? What steps do lenders need to take to include Freddie's product suite? So what's your perspective on that?
Well, first of all, you always take the opportunity to pick on me, so I'm not sure about that last statement. But yeah, there's been a couple noticeable or notable policy changes this year, right? So desktop appraisals went into policy for both the GSEs in March, and then the next kind of major policy changes, Freddie Mac on July 17th made their ACE Plus PDR product available, and really what that is, it's another form of appraisal waiver. So everyone loves appraisal waivers, right? Like, no appraisal, yay! Like people get, it's the only thing about appraisal people get really excited about, right? It's I don't have to get one, but this is another flavor that where it's a waiver, but there's also a inspection component or property data report that comes with that. The good news there is that it provides a in-between option in between a full waiver and then a traditional appraisal process. So now a property data report, there's additional workforces that can provide a property data report, non-appraisers such as real estate agents and folks that are trained and certified to use a technology-based approach, a mobile app to gather the data that meets Freddie Mac's standards to support that decision. And so you get kind of the best of both worlds. You get kind of the speed of the waiver, but then you get the information about the property, the condition, detailed understanding of what the property is, for confidence there, right? From an underwriting perspective. And then the way that Freddie Mac has set it up is that if there's issues with the property that come back in the property data report, for instance, if the condition rating is a C5 or C6, that there's a process by which you can not have to start over again with a traditional appraisal, but you can escalate to a hybrid appraisal, and you can get a completion report as well if the property is repaired, and you can do an update there. So it keeps you in the process as well, instead of kicking you out, which should give people some confidence, right, to go down this path and not worry as much about, oh no, like, what if I get that down here and I stop and I have to start over again? They've kind of thought about that in the workflow. The way that you take advantage of it is through the same, automated underwriting system that you work with Freddie now through LPA, to understand whether it's eligible or not.
Good deal. We're going to wrap up and switch gears and move on to our next segment, which is the market. I know we're inundated every day with news about what's going on in the market. So I'm really excited about this segment to get the perspective of our panelists. So rapidly evolving industry changes and unpredictability are outside of the realm of our control, but there are levers that we can pull and things that are within our control. So Roger, I'm going to pick on you now. While market shares with lenders, how can others diversify portfolios and add non-QM and loan types to bolster revenue?
Well, it's a tough question, and even preparing for the questions, you have questions that really are tough. But the truth is, I think you're going to always, on the non-QM side, it's very hard to speak unilaterally or universally, right? Everybody has, so from a Lima perspective, we are obviously owned by MFA. You have Blackstone in the game, among many other big ones, right? So our restrictions are directly associated to our ownership, right, and where our money's associated, right? So for us, we had to find what was acceptable within our threshold. So when I spoke to the hybrid a moment ago, opening that product wasn't just about saying, hey, we're going to offer the hybrid. We found a hybrid provider we like. We're moving forward, right? It was about digging in and confirming that we could still keep our risk similar to what we had before, right? So it wasn't just a hybrid. It was a hybrid plus the right appraisal software, right? So for us, implementing Value Lane, hiring staff appraisers, right? Us being able to diversify came from reducing the risk from a different approach, right? So we opened additional products, we opened additional appraisal products, and ultimately offset that risk with the right platform, with the right AMC providers, with the right appraisers, right? So for us, I know conventional or GSE world works much different, but for us, I can say specifically that was probably the key factor.
Well, I'd like to hear from our other panelists on that topic. What about you, Katie? Any thoughts?
Yeah, so I think Roger makes a fantastic point about making sure you have the right technology partner, be it your order management system or your vendor partners, your AMCs, right? So NP, we work directly with appraisers. We actually, we cut down on how many AMCs that we work with, but when we do partner up with an AMC like Clear Capital, right, we want to make sure that they, as well as our order management platform, which no surprise, is Value Link, right? We want to make sure that they also have their eye on what the industry is going to do moving forward, right? You don't want to get stuck in that rut where you know where you need to grow as a company, you know where you're going to pivot, but your technology providers can't do that. And so that's a really great point that Roger makes, is making sure that those technology providers, be it if they're your vendors or your order management platform, are aligned with your overall goals, as well as, overall in really embarking on this appraisal modernization journey.
Akil, I see you nod. Anything you want to add to that?
Yeah, absolutely. I think change is never easy, right? It's we all moved from DVDs to Netflix, right? So adding, moving from different times to time, right? With different markets, you have to be ready and be prepared. So we should all be looking for partners that can tie in and support our productivity goals. Partners like Clear Capital, Lima One, if we are doing a matchmaking exercise, we're providing the best in class solution. So all of us can benefit from that in providing those different products and supporting those through our technology, workflow options. And that is what I think, differentiates, clients and of course, providers like us who can really hone in on the needs of the clients and provide them solutions that will, make them thrive even in this market. So, yeah.
Thanks. Very insightful. There's a growing theme. If you nod your head, I'm going to call on you. So just heads up. But we're going to keep it here with Akil on the next question. So it's important for fintechs and other technology providers to work together to meet the needs of lenders, right, across the industry. So Akil, with you, what's the importance of seamlessly connecting lenders with the right technology partners to improve borrower experience and drive growth in this market?
Yeah, absolutely. I think it's crucial for a loan cycle to be as seamless and touchless as possible. So any technology partner that you partner up with, they should have robust APIs that can connect your loan origination system with your vendors like appraisers or AMCs like Roger and Katie mentioned. So it's important to have that seamless connectivity with all the providers. So eventually the borrowers that we all serve, they get a great experience out of it. We all think, why do we do this, right? Why do we build these technology and why do we build these automation and components? And I think the end goal is to make sure that the borrowers that we all serve, they are having a great experience working with lenders like, Lima One and NP Inc. So it's crucial to have the close-knit API integrations and providing workflow that is providing top-notch experience for the borrowers that we all eventually serve.
Katie, I see you have your hand raised. What are your thoughts?
Oh, I was just going to say the other aspect of that when it comes to finding the right technology partner, and something that ValueLink has been fantastic about is we all know that we have to focus on, does the ValueLink system connect to our LOS, or is it something that we can easily train on? But one of the things that have been fantastic is the borrower facing side of working with the right technology partner, knowing that when your technology partner does have to send out some type of notification to the end consumer, right, the borrower, that it's clear, it makes sense. It's not startling to that person who may be going through their first home buying experience and may not know all the moving parts yet, or may have been addressed by their loan officer as to, hey, you should expect this to, hit your inbox here soon. But in a world of phishing scams and everything else that we have to battle in our industry, right? Knowing that your technology partner is going to have everything laid out very clearly, so that way that end consumer experience, not just the business to business experience, but the end consumer experience for the borrower is top notch. And that's something that ValueLink has been phenomenal about. Everything can be you can put logos on it as necessary to make sure that that end user that's receiving that, whomever that may be, appraisers, borrowers, other teammates internally, know exactly what it is, where it's coming from, and how to execute on what they're being asked for.
Nice. And I know I do want to get to the Q&A section towards the end so that our viewing audience will have a chance to put our panelists in the hot seat. But we're going to wrap up for market and switch gears a little bit and move right into the technology piece. So, lenders are aware of the benefits and the role of technology to future ready their business, and where to begin and getting started, right, are common challenges given, the challenges of integrating new solutions into existing workflows or new technologies into legacy systems. So Roger, I'm going to pose this one back to you. How has Lima One addressed these issues, and how have you been able to make progress in the form of relying on new technology to meet specific business goals, to achieve revenue growth and reduce cycle times?
Yeah, so for us, this has been huge. And, you know, I just wanted to say, if you've been through a poor technology experience with appraisal platform provider, then you know how critically important it is, right? Unfortunately, you know, my mom said I was hard-headed, and I guess I am, because I've been through that cycle and had to learn the hard way what platform not to use. But the truth is, you know, for us in connecting with ValueLink, I mean, we've grown substantially. You know, just giving you pure numbers, in the last year and a half, we've gone from 22 business days, and I understand how dramatic this is. I would probably think I was making this up, but it's just the truth. 22 business days to 8.4, I think, as of this morning, to
Wow.
get completely accurate on holistic turn times. And that's since partnering up with Akil and ValueLink, bringing on an appraisal team. I mean, there's so many factors that go into that, and so much work, and, you know, so many pieces that have to tie in. But at the end of the day, it's absolutely critical and part of growth, right? If you can't provide it quicker, faster, and better than the next guy, I mean, especially in the non-QM world, these investors, they're on to the next place, right? As I would be as an investor, right? If I have 100 properties, that's a lot of money to trust with somebody, right? So I'm going to find the person who's going to provide it best, and over time, it doesn't take long to find out which one is the best, right? So from a customer-facing, internal, I mean, all the way down the line, I mean, you truly have to, if you don't have the technology built in, you're not going to keep up. It's just the simple truth of it.
Yeah, no, I do want to take a deeper dive into the technology piece. But Keenan, do you have anything to add on that note?
Yeah, Akil got me thinking with that Netflix statement on DVDs versus streaming, and so now I'm going to go off script. But Netflix just, you know, they put out a little ask to people that still had hung on to their DVDs to, like, take pictures of the DVDs they never returned back to Netflix and post those. And I was thinking about that, like, you know, nostalgia for legacy tech is cool, you know, but it's not a great way to run your business, like, right now, if you want to provide a good experience. And I think, you know, when you think about order management systems, you know, legacy systems that have not adapted to be able to offer automated workflow and easy API integration and be ready for what's coming next with a risk-based approach to appraisal, right? Not just a one size fits all approach, but different options based on different situations. That's going to be crucial to be competitive as a lender, I think, moving forward, and offering a great borrower experience and offering certainty, right? Because I think a lot of this is not just about how fast you're getting back a product, but it's about being able to communicate with certainty to the client. This is what to expect, and this is why you should stay here in this existing relationship, rather than shopping and going out and looking for other things, because you're not exactly sure what's going to happen. And that's the exciting part to me about modernization, is that it provides certainty and transparency. And as a lender, you need technology that actually lets you take advantage of that and implement it. So thanks for the Netflix reference, Akil.
No, so I want to probe that a little bit more. So you mentioned risk-based approach. So are you referencing, like, different loan types and complexities of the property? Can you give more insight into your vision on the risk-based approach?
Yeah, I think we've got a slide for that, coming up in a bit, but essentially it's that, not every property is the same, and not every loan decision is the same, right? And so, as we move more towards a world where we have more of a digitized understanding of properties, that means that we can use different methods of appraisal to get comfortable with what's happening at that property and comfortable with the value. That doesn't always mean sending out someone to the property, and trying to, sort of start from scratch every time. There's a, as data becomes standardized and digitized, we can start from what we already know and accelerate the rest of the process. So I'll talk more about kind of the different options, at least that Fannie Mae and Freddie Mac have been pretty clear about where they're headed from a risk standpoint.
Okay. All right, I'll come back to you on that. We'll move on to the next question. I think we just have a couple more and we'll get to our viewing audience. So Katie, I want to hear from you on this one, but how can lenders, fintechs, and order management systems and others simplify workflows for new products like desktop and your ACE Plus PDR?
Yeah, absolutely. I think the short answer is, and kind of the running theme of this conversation, right, is have the right technology partners in place. Make sure, if you know as a company where you want to go with utilizing those products, right, make sure that's one of the first questions to your vendors, to your technology partners, right? If the answer is no, especially at this day and age, right, that they don't have that on their roadmap, or that roadmap is much farther out than where you want to have that implemented as a business, I think at this point that's not really acceptable anymore. And you should be looking to the industry leaders like ValueLink, like Clear Capital, to make sure that they can be implemented in some way, shape, or form, so that way you can keep your business growing and taking advantage of these new opportunities and the new workflows. I know that coming from my previous years in the industry on the AMC side, I've heard all the things about what's coming in the pipeline, but knowing that when it got time to talk about those new offerings as new GSE regulations were rolling down, you get that hiccup of, oh, you can't quite pitch that yet, or we're not there yet. We're 90, 120 days out or more. At a certain point, that doesn't become acceptable. And now we're at that point, right? So I think that main thing is that running theme that we have here is getting the right technology partners in place that have that on their roadmap today, or are able to actualize that on that today. So that way you can start serving more borrowers.
No, yeah, that's a pretty good perspective, like pushing back on your technology partners and holding them accountable to helping you and aiding you in meeting your specific business goals. I like that. Roger, anything to add? And then we'll get to you, Akil.
Yeah, I was just going to say, from the lender side too, even past that, the pitches, or the sales pitch, if you will, for a lot of these platforms are impressive, right? I've used quite a few and talked to even more platforms over the years. And the truth is, you see these sales pitch, and you hear, open API everywhere these days, right? And it all sounds good and it looks good, but as a lender, I can't stress enough, do the diligence, right? Put in the time, confirm the integrations, right? Maybe it's foolish of me, I don't speak IT, but, the simple truth is, I've assumed starting down this road that if an integration was built, that it was built, right? So it just worked with whatever system it was integrated with, and that was that, right? When the truth is, there's so much more to it than that, right? The integration into our LOS is great, but the customization needed in order for Lima to maximize its efficiency is something totally different, right? So I would just add, really, really get in there as you do decide your technology, and make sure that you're asking the right questions, and even beyond that, testing what you're being told and what you're being shown in the sales pitch.
All right, Akil.
Yeah, absolutely. I think it's about knowing the users, knowing your internal processes, and like Roger mentioned, asking the right questions with your technology provider. I'm reading this book. It's called Clarity Wins. It's by Steve Woodruff. It was recommended by an industry partner and colleague. And it says that we all tune into an FM radio station called WIIFM. So what's in it for me, right? So understanding that thought process, understanding my technology partners, if they can help me grow, understanding the services they offer and ask tough questions on, yeah, you're offering an API integration, but how it actually works and impacts my users and end users. So same for the desktop and ACE and PDR products. So really choosing the right partner, which can really offer an end-to-end solution instead of certain pieces of the product. And while still coming back and, trying to fill missing pieces and eventually not rolling out with the technology that is a must, right, in coming in the future. So it's important to ask those right questions, understanding what's in it for me, and then choosing the right partner, even with your appraisal process with other products that you have in your ecosystem.
Yeah, so Roger talked about being able to, his accomplishment of reducing his cycle time from 22 days to 8 days, which is pretty compelling and powerful, I might add. But, having the right technology partner to do that, pushing back on your existing technology partner, holding them accountable. And then so I want to sort of circle back to Keenan on this risk-based approach, right, which sort of feeds into all of that, right? So what's the fastest path? So if we can move on to the next couple of slides and we can sort of get into the how-tos of that. So Akil, if you want to start us out with talking about the automated workflows, and then we'll move on to the risk-based approach.
Absolutely. So this is a workflow tool that we developed with partnership of Lima One and of course Clear Capital. And I must say, without Clear Capital, this wouldn't work. Without the technology partnership we have with Clear Capital, this wouldn't work. So this workflow tool that we built out can automatically place certain number of orders, certain orders based on the risk, based on certain milestone. And this completely automates those follow-up valuation needs that a lender has. So this can be turned on for certain states, for certain products. So Lima One uses this for Clear Capital CDA products. And what it does is automatically orders those products. The users, they don't need to rekey the property details. They don't need to rekey data sets. They don't need to rekey or upload a appraisal report on the order that is being used by Clear Capital for their CD analysis. So this is just a piece of the puzzle, and this automates that process, and that brings down, and that gives you a real ROI that brings down those turn times to, from 20 to 8 days. So this really impacts, or this shows the impact the technology can have in achieving those targets and those goals, and eventually your ROI. And again, I would reiterate, this wouldn't happen without the partnership that we have with Clear Capital. So yeah, this is the automated tool.
And I'll just jump in here. Putting this in was remarkable. Our securitization review turn time literally cut in half, if not better. There are states like Florida where we're seeing returns at times the same day. On our risk review, securitization review side, it's truly, truly impressive. And the fact that from a team member's perspective, I don't have to dedicate anyone to this task, right? So for the first few weeks, we ran validations to ensure that they were all ordering obviously right and ordering the right way, and went back and forth with valuing Clear Capital and Akil. But I got to tell you, I'm blown away at the results associated to this. Has been truly, truly incredible for us. So I can't thank Clear Capital and ValueLink enough. Really, this was a big change for us in the right direction.
Yeah, this is something that we've really been looking for partners to help with for quite a while, which is that we can't go any faster than when we actually receive the order. But if the ordering process isn't automated, then time is ticking before the order is even placed to us, and then often we have lenders placing an order in a panic because they realize that they haven't looked at the maximum time or the ultimate time to to place the order, and time's gone by, and now they're already against the clock, when we receive it. And of course, we do our best to rush the order and get it back, but that ends up being, costly and stressful and all those things. So having Value Link upstream think about this, come up with a solution that sets everybody up for success is it's really a breath of fresh air. But more than that, I think the people element, seeing the stress reduce from folks that are already dealing with enough, today in the market, is that makes me happy.
Good deal. I just want to acknowledge for 1 second, I do see the questions coming in. If you give us a few more minutes, I promise we'll get to it. Bridgel, if you will, just move on to the next slide. I want to take a deeper dive into this risk-based approach. I know a lot of the questions are around, the vision of modern, what percentage. So, Keenan, why don't you give us your vision and thoughts on this risk-based approach you talked about earlier?
Yeah, so I mean, we've been partnered with the GSEs for a number of years now in bringing this vision to reality, and really the idea of modernization, right, is that you would continually introduce more and more technology, data, and workflow to achieve the fastest, most confident result on a loan level basis. And so as we introduce data, where we work very hard to digitize as many US properties as possible, that creates more opportunity for appraisal waivers, of course, and everyone loves those because that's zero time. And then we talked about the Freddie Mac ACE Plus PDR program as being an example of an appraisal waiver plus an inspection. And so now, again, because we're dealing with a diverse workforce, and they're using mobile technology to deliver that inspection, I mean, we're seeing those can be turned, in under 3 days. And again, I'm talking about average sort of turn times right now. And then this is all, of course, changing as we go. But that's pulling that closer to that 0 days, even with the appraisal waiver plus inspection. Desktop appraisals haven't been, on the market for too long in terms of the most recent iteration, but we're seeing those, be faster than other types of appraisals, and when the data already exists or when it's easy to gain access to the property, we've been able to turn desktop appraisals in even less than 2 days. So again, more upstream data like things like floor plans and robust data in the MLS, robust data in the listing process, means that desktop appraisals can happen super fast as well. And then hybrid appraisals are still in test and learn from a GSE standpoint for some use cases, but this is really when there's a property data collection or inspection that's done by one person, and then the home is brought to the appraiser through the delivery of that property data report and the data that was collected with technology. So now the appraiser at their desk can complete it. So that's the hybrid, and throughout, of course, the past couple of years to now, I mean, we've seen those beat out traditional appraisals, even with 2 people involved, beat out traditional appraisals by 5 days plus on average, and that time kind of keeps coming down. Well, we're even seeing that be able to also happen, as close to 5 days as possible. And then we have traditional appraisals. So when you think about everything's kind of pulling up here towards the idea of a same day type appraisal, a decision that's able to be made for a lender, that's why I think the industry is saying, and GSEs are saying, we could see a world in which, in fact, I was talking with a chief appraiser of a top 10 lender, saying I could see a world in a couple of years where only 10% of appraisals are traditional appraisals, and the rest are some other form of alternative that yields more consistent results. So This is where it's going. This isn't a hypothesis anymore. This is a stated roadmap goal, and the policy changes have already started happening to back it up.
Good deal. Thanks, Keenan. Thanks everyone for your feedback and thoughts. Let's move on to our final question, and then we can get to the audience. I'll just ask this for Katie and Roger. The pandemic created opportunities and challenges alike, right? So the organizations that thrive, for those that could pivot quickly and adopt digital products and processes to meet the needs of lenders and borrowers. So Katie, to you first, do you agree that this agility will be a critical difference between organizations that thrive and those that experience volatility brought on by rapidly shifting market dynamics?
Yeah, absolutely. I think it's very, very clear that everybody involved in the loan originating process, the appraisal process, right? We want to be able to be, if we determine that we can't do one particular loan product for a borrower, right? We want to know as quickly as possible if we need to pivot. So that way, again, that borrower can still experience that dream of home ownership. And I think this moment that we're in right now in the industry, being able to pivot so quickly, being able to have the right technology partners, right? It's going to create that fervor with other lenders to encourage their technology providers, to encourage their competitors to adopt this. Do I think that being able to pivot to the Freddie ACE plus PDR or some of the other appraisal modernization, will that completely take away everything? No, just like Keenan said, when he was having his conversation with someone in the industry, right? I don't think traditionals will ever go away. And we're always going to have the, the unique one-off traditional appraiser that's going to take a little bit longer than typical, be it if we're in a slowdown right now or not. But I think right now, the movement that we're in with modernization, with all of the technology, I think it is going to have us all kind of pushing one another towards being faster, being more agile, to be able to get not only through this, but to come out of the other side of this volatility successful and being able to, again, serve more borrowers.
All right, Roger, we'll wrap up with you. What are your thoughts and what's been your formula for success?
Yeah, I was going to say first, I mean, to Katie's point, spot on, right? Keenan both. I mean, full appraisal is always going to have its place in the industry. For me, specifically, I'm, a different breed, but I joined Lima when lending was crippled by COVID, right? So companies were laying off and everybody said I was a bit crazy, leaving stability in the middle of, I think Lima went from 100 million a month to like 5 million a month, and my previous employer was the same, and here I am switching companies. But our dream and the vision was aligned, right? And a lot of that vision was the technology pieces and the alternatives that we wanted to put in place and the things in the market that we wanted to introduce. So, for us, it's extremely difficult to say, hey, get some technology and you're going to be great, because it's not that simple, right? But the technology is a critical piece of the success and how you build it and what you do with it, right? But I do and live by, but in terms of my career, the simple fact that we can use these alternatives in much more places while maintaining and reducing risk associated to these deals, especially in the non-QM world with borrowers the size that we have, right? So the 110th time that a borrower comes to you for a loan should be a different experience than the first 1 through 5. And if you cannot provide that, right, why are they coming back for 111? I mean, that's a lot of pain, right? So, at the end of the day, for speaking for us specifically, the success was just that, right? Recognizing the opportunity and then locating the right players, right? The right providers and the right technology, and just working hard to put it together.
All right, so that takes us to our next and final. So closing thoughts, I will just say, I do want to get to the audience. I promise I have to keep my promise. So can we keep it at about 20 or 30 seconds for each of our panelists? But Keenan, I'll kick it back to you. Closing thoughts.
Yeah, I think, you know, the biggest takeaway from this is, you know, this idea of partnership, right? You know, that you know, no one solution is going to solve all the problems, and so it takes, you know, thoughtful consideration from the lender thinking about their ecosystem and how their ecosystem is working together and partnering together to solve problems before they ask for it. And I think that's where the real power is. You know, we've seen a lot of technology opportunities over the past few years of different products, but if they're just in silos where you have to integrate to each one and then figure out what to do, you don't get the full benefit out of it. So this has been a good opportunity to explore what can happen when the ecosystem actually works together to solve problems on behalf of our mutual client.
All right, anyone
Katie?
else? If not, I'll hand it back to Bridgel.
Yeah, if anyone wants to say anything, feel free to jump in. All right. Well, so we have a couple minutes left, about 6, so we'll get to some questions. We'll start with one to Katie. How does utilizing a service like ValueLink streamline, modernize, and create profitability in the appraisal process?
Great question. So I think first and foremost, right, it does force you, like we've all mentioned on this webinar, right? It does force you to look at your internal processes and determine what is still manual, what is still a little outdated, right? What can you ask your technology providers to automate for you? It does also force you to look at your investors and say, you know, almost respectfully challenge them and say, hey, you're not yet allowing us to utilize this desktop appraisal, or your guidelines aren't yet updated to allow us to use, you know, the Freddie ACE plus PDR. Why is that? How do we get to that place, right? Utilizing a service like ValueLink, where there is so much automation, there is so much malleability, right? It does force you to take a step back and go, okay, we can do so much here. It gets you excited. It makes you want to make things better. And that translates to your downlines, to your other departments, and ultimately to your borrower, creating that really fantastic experience.
Great, thank you. The next question. Let's see, this one looks like it would be good for Akil. So customer service is a statement or tagline that every company touts these days. How are your companies doing it differently?
Yeah, great question. I think service levels, especially right now, they are under a microscope. Everybody wants to get things done now, right? We are living in the age of Amazon Prime, right? And it's not just the amazing technology that comes, but it also the customer service that comes with the technology. So it's very important to have the SLAs in place. It's very important to not just get a timely answer, but the right answer in time, right? So that is crucial for maintaining, you know, your borrower experience. That is crucial in maintaining your client relationship. So making sure that you have your SLAs defined, making sure that the partners that you're working with, they are hand in hand, providing you support as well as you move through the journey of the platform usage. I hope I answered that question.
Thank you.
Yeah.
All right, and this next one, most modernization is driven by data, but data can be difficult in markets without much volume. This is towards Katie. How do you determine your best AMCs or vendor partners in areas that you may only do a couple of orders a month and have wildly different data?
That is a fantastic question, and one that I think we all face no matter what side, if we're GSE regulated or in the non-QM space, right? I think, again, underlying theme here, right, is technology, right? Having your right technology in place. And when you have that in place, such as we do, right, we have ValueLink, you're the right technology partner is going to have a very robust reporting environment. They're going to be able to already capture those data points. So when you get that self-reported data from those AMCs, even if you're feeding them onesie, twosie orders, you're going to be able to very clearly match up the data points one-to-one and determine either where your internal process flows have fallen out and therefore impacted that AMC's performance, or where there may be other issues that need to be explored with that vendor partner, with that AMC or the technology, to make sure all three parties come together and get that seamless borrower experience.
Thank you. Okay, this next question is open to any panelists. So what do you look for in a technology provider, specifically order management platforms? You can raise your hand if you feel like tackling it.
Roger, you want to
Katie?
take that one?
Yeah.
Yeah, I was gonna say, for me personally, it's the integrations are big. I mean, God, you could have a call around this question alone probably, but the integrations are critical, right? Ensuring that those integrations fit your needs, right? Every lender is gonna be different regardless of the back end. And then, speed, to Akil's point, right? We are living in an Amazon Prime market, and Akil still laughs at me, but even, 2 years later, I'm still pushing. I want everything in 12 minutes too, right? So we want to be the best. But going back to the beginning, confirm. Make sure that your provider can provide what they're promising you. And from there, validating that the customization actually works, right? But the integrations with your AMCs, your products are critical. Eliminate the manpower needed, and ultimately, hopefully set you up where the majority of your strong appraisals are coming through without a lot of manpower required, right? So hopefully that helps.
All right, it looks like we still have a couple questions, but we're going to do our best to either email you directly or back to you after the webinar is over with an answer to those questions. So in the meantime, if you do have a question that you think of after, feel free to email one of these email addresses to one of us. And as a final reminder, this webinar is being recorded and will be sent out to everyone by tomorrow. But thanks everyone so much for joining. We really appreciate having you.
Thank you.
Thank you.
Thanks, guys.
Bye.